Customer-obsessed internet companies like Uber, Swiggy, Zomato have changed consumer expectations forever. Today, high-quality services are available at the tap of a button from the comfort of our home. Banking, however, for a large part, has revolved around cumbersome processes and compliances. Why should customers expect any less from their banks? Can banking still instill a sense of joy? This is exactly what Jitendra Gupta, the founder of Neobank Jupiter, asked himself when he set out to change the way that millennials banked. Jitendra is no stranger to financial services. He has built and scaled revolutionary products in the digital payment ecosystem. After a 7 year stint at ICICI, he founded CitrusPay, which brought to market many first time payment solutions for merchants. Post a successful exit to Naspers in 2016, he served as the MD of PayU, where he created the Pay Later brand LazyPay. Jitendra began his second innings as an entrepreneur in August 2019 with Jupiter, a mobile first neo-banking platform targeted at millennials. In today's episode of Founders Unfiltered, Jitendra talks about his learnings from his earlier stint, his approach to building a trust based relationship with consumers, and shares some incredible insights for anyone interested in the fintech space. And as always, stay tuned for some unfiltered advice at the end of the episode. Hi, Jitin, and welcome to Founders Unfiltered. Great to have you here. Thank you so much for making the time.
Thanks, Mazin. Uh, Great to be, it's a pleasure to come here with you on this podcast.
So let's jump right into it. And can you talk us about your time growing up and some early milestones in your career that kind of shaped your journey and helped you get to where you are today?
Sure. So, I started, so by the way, I'm a CA by qualification. And so I'm not sure how many of the users know that. But somehow I personally never enjoyed doing anything related to CA as a profession. So I always wanted to do things which are either in banking or on the technology side. So my first 7 years of career, I started with ICICI, and I think I would say that was a defining moment for me in the sense I joined the bank when the bank was becoming from a institutional bank to a retail bank. So I've seen the formation year of retail banking, and that I think gave me a very good perspective in terms of how things are operated, how things can be grown at a scale. And I think I still take quite a few learnings from my that stint which I did with ICICI for 7 years. After working for ICICI, I realized because my last stint in ICICI was in payment strategy, and I realized back then that a bank is not investing enough onto the technology side. And for that matter, it was not a ICICI specific problem statement. It was like across the banks. And while merchants' expectations were, reliability of the system, the better checkout experience, and we said that the independent player could do a much better job, and that's how this whole birth of Citrus Pay happened. Again, that journey was very interesting in the sense being a non-tech founder, the usual problems: how do you get your first tech guy on board? How do you evaluate the tech guy that he's the right person to get on board? And getting the first client, going through all the issues around stability and systems, and the startup was started in like 2011 when the startup culture was not much prevalent. So
Right.
they're convincing the initial set of guys to join and tell them that, hey, this could be a wealth creation opportunity for you. And they're like, we don't care about ESOP. We have not heard anybody making ESOP money from ESOP. But fast forward 5 years, it really shaped up well. In fact, in like Citrus journey was interesting in the sense that we brought many firsts to the market. This whole today card save option, which you see at the checkout experiences, we were the one who brought to the market. We made the whole customer checkout experience pretty seamless. We focused on the reliability for the merchants for payments conversion. So all of those things which we did, I would not say we kind of did any rocket science innovation, but we focused on basics, and that really helped create us almost 15% on market share back then. Interesting journey overall, and I would say those are the journeys which were defining journey of my career personally.
Absolutely. And would love to kind of dive into that a bit more. I know a lot of people listening to this podcast, and me personally, I've experienced it as a non-tech founder. How do you go about getting your first tech person? And like you said, how do you evaluate that this person's good? That's always difficult.
Yeah, absolutely. So, uh, one of the thing which I focused personally was let me sort of, since I'm not a technically equipped guy to evaluate anyone, let me focus on the other traits, that how passionate the person is and whether the person believes in the mission of what we're trying to do. And that's a good enough benchmark to hire. And that's how we got started.
Yeah, no, absolutely. So kind of looking for enthusiasm, other characteristics that you see in a tech founder. And then you spoke about something else that I've heard before and want to kind of emphasize on it. You said you focused on basics. What you did was not rocket science, focused on basics. Was that sort of your mindset from day one? Just, kind of the fundamentals are missing. Let me focus on getting it right.
Yeah, so the idea was very simple, that let's just address the basics first before we start building on top of it. And I think the bar was very, very low. So today, when I look at the online payments as an industry, the bar is quite high for any new player to come in. But at that point, the bar was so low that even if you did basics right, you would have done a scalable business. So that was the whole idea. And then we said that innovation will keep introducing as we start scaling and as we start getting more merchants. Because on day one, I don't think we had clarity of thought that this is how we're going to change the online payments market. We did not have that clarity. But we are very sure after talking to merchants that there is a problem which exists which we got to solve for. That was the only clarity we had.
Yeah. So, I mean, focus on the problem and solve it, which sounds simple, but is often hard to do. Uh, and now, as a second time founder, I would imagine your perspective is very different. The way that you go about tackling the problem is different. Also, the way that you go about recruiting is different. So, can you maybe touch on some of those differences?
Well, yeah, I would say uh, the one caveat I'll give, be the first time founder or the second time founder, the problem statement is different. So you can't replicate your success of the first time thing into the second time thing. And second, every startup is different and there is no guarantee of success. So yes, you have your advantages of learning and you don't make the same mistakes which you learned through your own experiences. So I think that is a real benefit which I'm seeing. So just to highlight specifically, one of the thing which we really faced issue was like when we were building our teams, we are always hiring for the moment. In my first startup, and here, when we are building teams, we are like, okay, how the company could look like 3 years down the line or 4 years down the line, and let me hire for the person who could scale for next 3 4 years. So I think that was a clear idea which we are doing, which is the biggest difference, I would say. Second is the importance of tech. So that is playing a big role in terms of how uh, uh, the tech can differentiate the product offering itself, be it the customer experience, be it the personalization of the experience which you can provide through that by leveraging data. And like I think in my first startup, we started understanding the importance of data after 3.5 years of journey. In this company we have like data science team right from day one, so we know that this is the team which is going to make us differentiated and able to allow able to like sort of enable us to offer a personalized experience in the banking to the consumers. So lot much perspective difference. And the last thing I would say, the market has changed in terms of your fundraising and all of that. So you tend to take advantage of that in terms of how much dilution you want to do, how much dilution you don't want to do, and how, like, if you have to run this company for next 20 years, what is that outlook you want to have for 20 years in terms of your holding, personal holding. So all, and then you take the decision of capital raising accordingly. So
Mhm.
all of those things played role in this venture.
Can you give us your perspective? Why do you think this is happening? Why are we seeing more and more neobanks? And what about India? Is India ready for this now? Would love to know what you think.
Sure. So I think banking as a sector, if you look at worldwide or even India, I think the way banks have built their businesses over last 25 years or 20 years, they sort of tried building an institution which is more around process, more around compliance, rather than institution which is more around customer or more around
Yeah.
delighting the customer. So there is a big difference. While it was okay until 5 years back, I would say. Uh, but things have changed. People have experienced Ubers, or DoorDash, or Zomatos, or Swiggies, and all of those kind of Amazon, and all of those kind of companies, in terms of the customer service, in terms of how they look for the product. So like, there's a search, reviews, ratings, recommendation. This is how you draw trust.
Mhm.
So how you discover the product. So a lot has evolved from a customer expectation standpoint. Well, banks have still been operating the same principles which they started with, which is follow the compliance, follow the rules,
Yeah.
just one-sided approach. And I think that has led to this whole wave of neo banking coming in, who took the leaf out of consumer product businesses and tried to bring those experiences to banking. So that's the big difference, I would say. Now globally, we have seen there is also a perception, right, which every neobank is monetizing on or leveraging on, the perception of consumers that I don't relate to my bank, and like, I can't figure out whether I can fit into their process, and I think that is a very simple perception which every neobank is hitting on, in my view, including us. And that has led to this evoking the emotions of the consumer that, hey, I need something different, I need something better. And I think that's the wave which we are seeing. Now, coming to reality, that is there a real difference which these neobanks have brought to the market? I would say that I think the basic tenets of the product have more or less been same, which were there, which have been there for last 20 years. But the key difference is the customer obsession, and I think that is the number one difference in terms of whether that product makes sense for the consumer, how you offer the product to the consumer. So I'll give you like simple example. Today, when a bank offers, let's say, insurance product to the consumer, they will just keep spamming SMS and phone calls and all of that, and that's how they sell insurance.
Yeah.
But how the neobanks are selling, like, let's say they want to give you a travel insurance, and let's say you're traveling to XYZ location. As soon as you land there, they'll send you a push notification. Hey, this is your travel insurance policy. Click yes to avail it. Now that is a more contextual experience or personalized experience, and I think that's the difference. But coming to India as a context, I must admit that doing a neobank in India way more difficult than any other parts of the world, and two reasons for that. The infrastructure don't exist, doesn't exist. So there is no Rails Bank or Synapse or Plate kind of a
Yeah.
company in India which could provide you to be up and running in like months rather than a year and a half, which we took. And second is, I think the banks in India have been doing, have, I would say, have woken up way earlier than the other banks or other parts
Mhm.
of the banks in other parts of the world. So from that standpoint, the bar is very, very high to be to get a initial success or momentum. So from that standpoint, in India, the bar is high. for us to make a meaningful business or attraction.
No, absolutely. And I think that's a good point. The one question I always ask myself, though, it seems obvious, right? We all know customer obsession. That's what separates neobanks from traditional banks. Why do you think it's so hard for traditional banks to do that?
It's a mindset. It's a mindset issue. Like if you look at banks, technology teams, they might be a commerce grads also, or they are just the tech teams are mainly the teams who manage vendors. They while the consumer internet startups tech team is the hardcore
The
techies,
heart of yeah.
or the product teams in the banks are the program managers, but the product teams in consumer internet companies are real product guys who have a deep consumer insights, who are like ready to be iterative. Like I don't want to bash any bank, but without naming it, I would say like I looked at an app of a bank, and that app has I've been using for last 15 years. It has not changed in 15 years. Now
Like
how can a consumer product not change in 15 years and remain as it is? So that's how I see the focus.
no, it's that's amazing. And so about Jupiter, can you tell us, what exactly are you guys trying to build? What's the specifics problem that you're solving, and how you're going about doing it?
Sure. So at Jupiter, the idea is very simple. That uh, how do we become the day-to-day finance app for the consumer?
Okay.
Today, if you look at it, the consumer's expectation from a bank is that my bank should be able to deliver better returns for me. My bank should be able to advise me for me to become financially savvy.
Mhm.
My bank should be able to help me get a lower cost of debt, or maybe get a debt free somehow. Uh, but that is very counterintuitive to how banks think. Uh, and banks want to give you more debt. Banks want to
That's right, exactly.
take
I want
take
to get
take
more credit.
take,
Yeah.
take more commission out of the investments you do through them. Bank wants to make you keep more idle balances in the account without earning much returns. So
Yeah.
I think it's a kind of a fundamental flaw, or the forces are different in terms of the way things should work. So we said that let's take consumer at the center and build everything accordingly, that what's in the best interest of the consumer. So while banking is a starting point in terms of the bank account is a starting point, because that's the relationship which is the trust based relationship which a consumer creates with the account, because they park their money there. So and through that account, we want to help drive uh, financial savviness for the consumer. We want to bring in financial discipline in the customer's behavior, and effectively get to a position where customer can trust us for any advice which they need related to their day-to-day finances. I think that is what the position we want to reach ultimately.
It's amazing. And I've seen some of the steps that you guys have taken towards doing that. I saw your Trello board specifically, which I thought was awesome. Also really creative with the waitlist. So yeah, I mean, curious to know how you kind of came up with that. And for the Trello board specifically, were there any ideas that you'd like to call out that you got from consumers that you didn't think of yourself?
So I must say, Aviral, sorry, Misvi, that each feature which we have built in Jupiter has been first thoroughly tested with our community, and we have taken a detailed feedback from the community before taking it to the tech for building. So, and that's why the feedback which we are seeing now from the consumers is kind of not unexpected feedback. So customers are saying, wow, this was expected, wow, I'm liking this. So to our delight, so far we have not seen anything where we are caught off guard. So I think that is what giving us a real pleasure. So we picked up many ideas, like a simple idea, like when you open the banking app, hide your balances. You don't want to see your balance upfront, because there might be somebody looking over the shoulder when you open the app. So how do you sort of have that? So small things also we have paid attention to, have picked up.
And it's the small things that add up, definitely. And so that gets me to my next question, which is, what do you see as Jupiter's? Well, first of all, who exactly is your competition? Is it traditional banks that are kind of moving towards the digital front? Is it other tech players? Is it the government with RuPay? Who's your competition? And then what is your USP and how do you differentiate?
Sure. So, the way I see, if you look at the banking industry has what, 100 plus banks. And if you look at the top 50 banks and their retail portfolio, all of them are doing well. So why I'm saying so, because what I'm trying to highlight is the industry is very big. Uh, and you don't need to worry that, hey, if I don't get 100 million consumers, then only I can be winner. So like otherwise there is no place for me. So fortunately, the retail banking in India is such a vast market that even 10 new players come in, they will survive and they will thrive. And like you look at Kotak was I think 40th or 45th bank when they launched in 2003. And look at the position now, they're at a number 2 or number 3. So it is hardcore execution, and that's how I see that there is enough space for more players to come into this sector. So now when you ask me who's your competition, somehow I see that our TG is every smartphone user. So that is our TG, because our app works only on smartphone. If that is a TG, then if that TG is with the private banks or public sector banks, we would try to address that TG. So and I think when you sort of benchmark yourself against them, I don't feel threatened in that sense that who I'm competing against. So from that standpoint, while yes, they have got a brand and wide distribution, but that being said, I think today's customers doesn't care about that. Today's customers care about who gives me the best experience, who delivers me the best service, who addresses my concerns fastest, and that's what we intend to be for today's consumer.
That makes a lot of sense. And you've had a fairly unique go-to-market strategy. You guys haven't launched yet, right? Is that correct?
No, we launched on 24th of June.
Okay.
We in fact, on our wait list, we got close to 100K consumers on
Okay.
our wait list. We started giving access to the wait list last 4 weeks since 4 weeks, and is going great. In fact, I must say that the numbers which we are seeing on an everyday basis are more than we expected. Well, I don't want to quote exact numbers, but I
Yeah,
must say the number of accounts which we opened, we had not budgeted this number, and they are sort of beating our own expectations.
that's amazing. And I guess this goes into the concept that you guys had of a first list and a next list. Can you walk us through the thought process there? Like, why have a wait list and kind of limit the number of people that can sign up?
So, there was a very clear thinking that this is a product which is a trust-based product. Now, in this product, you cannot have a leeway with the consumer saying that, oh, I am a startup and I goofed up with your money. Like in Citrus, I remember we had few issues. We went to the merchants, apologized, said, oh, no, we goofed up, but we are a startup. We'll fix it, and excuses and all of that. But I don't think we have those chances here. So in that sense, we wanted to be very very sure about our capability to deliver at a scale. So right now we are scaling in a manner in which we are getting more and more confident each day. So that was the whole idea of controlling or rationing the onboarding number of onboardings every day. So that was a idea. So I think once we have crossed 100,000 users who have been part of our first list and next list, that's the time when we'll start opening up for everyone. But right now, we don't want to open till the time we hit that number, because We just want to ensure that every day everything is stable, works as expected, and no unknown which we are discovering. That's the whole idea.
Yeah, makes sense. And also, creating scarcity does obviously drive a bit of demand up, which I'm sure helped. But uh, so talking about kind of next steps now that you guys have launched and you've gone through this whole process of creating a good product, you're ready, or sounds like you're close to ready to kind of opening this up to everyone. How are you thinking about scaling and growth? With the kind of experience that you already have as a second-time founder, having gone through that growth journey.
So I think fortunately this
About it
business,
for Jupiter.
yeah, so this business, as I said, is more of a trust-based business rather than, you give cashbacks and then tell user to switch account for the day and then user go back for to the another account another day. I don't think this business would work that way. So from that standpoint, our growth plans are very simple. get get these 100,000 users, give them a super delightful experience, give them a seamless product, give them real value in terms of the real insights into their finances, help them meet their goals, and network effect will start coming in on its own. So while we will invest into the brand marketing side of our efforts, because that's important to create awareness, but I don't think so we are gonna do some guerrilla tactic and go berserk like the way other consumer internet brands do. So we believe that if we focus on product and if we do a good job around product, consumers will come in, and we don't want to we are not targeting frankly that, oh, we want to achieve 100 million consumers in next 5 years. We actually would be very happy if we have got 10 million consumers in 5 years. We'd be very happy with that, because we want to have a real relationship with the consumer. So that's our goal.
So it sounds more like a focus on depth and providing more better quality services to few people rather than providing everything to everyone. Obviously, is a much better way to think about it. But when it comes to building a neobank, one of the things that I really wonder, there's so many different features that banks provide and so many different services. How do you prioritize as a startup? I mean, you can't do everything. How do you decide what to focus on?
Sure. So in terms of, so you're right. I think today, when a customer comes to a bank, his expectation with the bank is the breadth of the financial services products rather than just a monoline product. So we got to have that additional pressure to deliver things at high velocity, so that we are not disappointing our customers. So our first priority was very clear that let's build the deposit product first, get the product market fit, get the initial set of users. But post that, we already start planning. So we would work on the lending side, we'll work on the investment side, but we already started planning on that side. So because we know that the TG which we are going after, which is this first job, second job, salaried professionals, what are their needs? Like, they are not looking at some everyday home loans or something like auto loans and all of that, but they definitely look for the personal loans. They definitely look for the investment solutions and all of those kind of stuff. So those are the things which we are building or working on. But again, all these priorities, our community plays a very important role. So we actually go back to our community to check, uh, like, we are building this product, do you think this makes sense for you? And by talking to 50 to 100 users on the community, you can actually figure out what is a pressing need now, and what the thing which you can sort of push it down the road. So we use our community very, very actively to get those insights.
I think that's great advice for anyone out there who's thinking of building a product in the fintech space. Any other advice for especially young founders who are doing it for the first time? The fintech space can be daunting. Any advice?
Yeah, so the only advice I'll give is that fintech space in India is like uh, has many challenges in terms of the regulatory challenge. How do you work with banks? How do you sort of strike a balanced relationship with the partner bank or NBFC? So there are many challenges, but I think the only way to get success is your perseverance, and it's very easy. There will be various moments where you'll feel like, oh, my business has gone down, or I'm not making it. But if you continue pushing and keep patience, I think fortunately the market tailwinds are so strong that you will tend to get success. You have to just stay in the pool effectively. And if that and that's where most of the people give up.
Yeah, no, it's not easy though to stick with it, right? How do you stay motivated? How do you kind of build up that conviction? Yeah, it's always hard. But I want to talk a bit about your investments. I mean, you've obviously been quite active in the startup space. You're on the board of various fintech startups. Uh, what was that like? What do you see? Are there any kind of observations on what they've done to be successful? Any kind of insights on the industry overall that you can share with us?
Sure. So let me explain like how my journey started. So I think my journey started post I sold Citrus in 2016, and so it was obvious because I had a surplus cash, and I'm like, I've got choices to deploy in the public market or to deploy back into the ecosystem. And I took this call that 25-30% of the money created, I'm going to deploy back to the ecosystem, because that's where I got my money from. So uh, so that was very clear. Now I think the initial idea was, let me stay relevant. I mean, if you realize, I started the company in 2011 when the startup industry did not exist. 2016 the market changed significantly. 2021 is way different, 180-degree different. So to stay
Yeah.
relevant, so I said, let me start investing. Let me sort of treat this as a tuition fee, pay to the smart founders, and then learn from them. And I think that has really played out well. So the initial idea was not the financial outcome, but of course, I was lucky to that we got to partner with the really smart founders, and that those theses played out. So what I learned in my journey, but those tuition fee also returned money. So I think that was a pure luck, I would say. uh, but I think the thesis, when I look at any investment now, of course I've got some bit of wisdom there after 5 years of experience of investing.
Yeah.
I think the thesis which I look at personally is, what is the market size person is going after. Second, is a person or a founder a good storyteller or not? And third, what has been the track record of execution of the founder? I think these are the three things mainly. And if these three things checks off, it's a no-brainer decision. Uh, Fortunately, I've been lucky that most of my investments have come through references or my ex-employees.
Okay.
So there was a fair amount of, I would say, so I did not have to do any additional diligence on whether this guy can execute or not, because they were either very strong references, or the people had worked with me. Like my 15 odd companies got started from people who worked with me directly.
That's amazing.
So it was a no-brainer decision to invest in all 15 of them. So I think that's how I would say that it's a combination of bit of wisdom and luck.
No, but I really like that framework. I mean, the three things that you listed out: look for a track record of execution, kind of understand the founder's story. It's a good way to think about it. So thank you for that. That was quite helpful, and love the anecdote of thinking of it as tuition fees. That's just amazing. Uh, so want to ask one question that we ask all our guests on this show. What was a one piece of unfiltered feedback that you received in your journey that really impacted you either personally or professionally?
Yeah, so this was a feedback given to me by actually two. two individuals. So one was Mohit Bhatnagar from Sequoia, and second was Amrish, who was my partner at Citrus, but also now CEO at Pine Labs. I think in my first 2.5 years of journey in Citrus, one of the mistake or so-called inexperienced decisions which I was taking was, which I said, I was hiring people to solve my current problem. And I think that was the advice which both these individuals gave me, that, Jiten, if you're to build a long lasting, enduring institution, then you got to hire people who can, well, they believe in your vision, but who can also scale for next 5 years. And I think that is what I took as a very strong advice for myself, and I practice it. I have been practicing it for last 4 years actually now, and it has really helped me.
And so, what does that mean? I'm curious. How do you practice that?
So the way I look at it, like when I talk to any candidate, I look at it whether this candidate, if my company scales to 3x or 10x from here, whether this candidate can handle that scale in terms of the maturity, team management, and his technical capability. And if these three things sort of sounds great about the candidate, that's how we take the call. Otherwise, earlier I'm like, oh, I have this ops issue. I need someone to solve for it. Let me look for a candidate who can solve the current issue now. So I think that is the big difference is.
That's really helpful. Thank you so much. Really enjoyed the conversation. It was a pleasure having you, Jiten.
Thanks, Mazin. Really appreciate this conversation. Thank you.